Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets lurking within company reports. And today we're diving deep into the financial statement of an investment company. Will it be a treasure trove of growth or a cautionary tale? Stick around to find out. We're looking at the T. Rowe Price Retirement 2045 Fund, specifically their semi-annual shareholder report for the period ending the 30th of November. 2025, this document gives us a snapshot of how this fund, which aims for long-term total return with growth and income, has been doing. It invests in other T. Rowe Price stock and bond funds and adjusts its strategy over time to become more conservative. Think of it as a fund for people planning for retirement decades down the line. First off, let's talk about costs. Nobody likes paying fees, but they're a reality in investing. For a hypothetical $10,000 investment in the investor class of the retirement 2045 fund, the costs for the last 6 months were just $32, which is 0.60%. Not too shabby. The advisor class, however, had costs of $45 or 0.85% for the same investment, and the R class that came in at $59 or 1.10%. The I class, which is usually for larger investors, had the lowest costs at $23 or 0.43%. So the class of shares you choose definitely impacts how much you pay. Now for the big numbers, the fund's total net assets were a massive $18,838,206,000. That is over $18 billion. This fund is a significant player in the market. It held 29 different investments, which means it is diversified. The portfolio turnover rate was 4.5%. This means they weren't buying and selling a whole lot of their holdings during this period, suggesting a fairly stable investment approach. Let's see where all that money was invested. Domestic equity funds made up the largest chunk at 67.2%. This means the fund was heavily invested in stocks of companies based in the United States. International equity funds followed at 28.2%. So they were also looking for opportunities outside the US. Bond funds represented a smaller portion, with domestic bond funds at 2.4% and international bond funds at 0.6%. US Treasury debt was a tiny sliver at 0.1%, and short-term investments and others made up the remaining 1.5%. This allocation tells us the fund was primarily focused on growth through equities, with a good mix of domestic and international exposure. Digging a bit deeper, let's look at the top 10 holdings. The biggest single holding was the T. Rowe Price Value Fund at 15.1%. Then came the T. Rowe Price Growth Stock Fund at 14.8%. Other major holdings included the T. Rowe Price Equity Index 500 Fund at 10% and the T. Rowe Price US Large Cap Core Fund at 9.7%. These top holdings indicate a strategy that leverages other T. Rowe Price funds to achieve broad market exposure and specific investment styles like value and growth. The presence of both large cap and mid cap funds in the top 10 also suggests a diversified approach across different company sizes. Moving into the detailed portfolio of investments, we see a clear breakdown of what the fund was actually holding. Under bond funds, we see various T. Rowe Price bond funds, like the New Income Fund and US Treasury, Long-Term Index Fund. For equity funds, it is a similar story with the Value Fund, Growth Stock Fund, and the Equity Index 500 Fund being prominent. The vast majority of these investments are in other T. Rowe Price funds, which is expected for a fund of funds. This structure allows investors to easily diversify across different asset classes and strategies managed by T. Rowe Price. It is interesting to note that the fund also held some short-term investments, like the T. Rowe Price US Treasury Money Fund, to maintain liquidity. Now let's look at the financial highlights, which give us a historical perspective. For the investor class, the net asset value, or what each share is worth, went from $23.25 at the start of the period to $26.2 at the end. That is a solid gain. The total return for the investor class for the 6 months ending the 30th of November 2025 was 12.69%. That is a very strong performance for a half year. The ratios to average net assets show gross expenses were 0.60% and net expenses were also 0.60%, indicating no significant expense waivers. Net investment income was a negative 0.27% for the period, which is somewhat expected given the fund's focus on capital appreciation and its structure as a fund of funds. Looking at the advisor class, the net asset value per S-Hair grew from $22.98 to $25.86. Their total return for the 6 months was 12.53%. Gross and net expenses were both 0.85%. Again, net investment income was negative at 0.52%. For the R class, the net asset value per S-Hair increased from $22.55 to $25.34. Their total return was 12.37%. Gross and net expenses here were 1.10%, which aligns with the higher costs we saw earlier. Net investment income was negative 0.76%. And finally, the I-Class, their net asset value per S-Hair went from $23.27 to $26.24. The total return here was 12.76%, the highest of all the classes for this period. Expense ratios were the lowest at 0.43%. Net investment income was negative 0.10%. It's clear that the I-Class offers the best performance in terms of net return due to its lower expense ratio. Let's fast forward to the statement of assets and liabilities as of the 30th of November 2025. Total assets stood at a substantial $18,870,806,000. After accounting for liabilities, which included things like management fees payable and variation margin payable on futures contracts, the net assets of the fund were $18,838,206,000. This matches the total net assets we saw earlier. The net asset value per S-Hair figures for each class are also clearly laid out here, confirming the NAVs we discussed in the financial highlights. For instance, the investor class had a net asset value of $26.2 per S-Hair. The statement of operations for the 6 months ended the 30th of November 2025 shows the fund's income and expenses. Total income was $30,622,000, mostly from income distributions from underlying T. Rowe Price funds. However, total expenses were significantly higher at $49,228,000. This resulted in a net investment loss of $18,606,000 for the period. Now, that might sound alarming, but remember, this fund is designed for long-term growth, and the capital appreciation from its underlying investments is where the real return often comes from. The fund realized a net gain of $206,701,000 and saw a change in net unrealized gain of over $1.9 billion, leading to a massive net realized and unrealized gain of over $2.19 billion. This substantial gain is what boosted the net asset value and the total return for the period. This section details transactions with affiliated companies, which in this case are other T. Rowe Price funds. It shows that the fund realized a net gain of $233,486,000 from these affiliated companies, and had a significant change in net unrealized gain of almost $2 billion. This highlights how the fund's performance is directly tied to the performance of the underlying T. Rowe Price funds it invests in. The notes to the financial statements provide crucial context. Importantly, the fund itself is an open-end management investment company. It invests in a portfolio of other T. Rowe Price stock and bond funds, meaning its performance is a reflection of those underlying funds. The fund has 4 share classes: investor, advisor, R, and I, each with different features including varying costs. The advisor and R classes have Rule 12B-1 plans which compensate intermediaries. The I-Class has a high initial investment minimum, making it suitable for larger investors. Investments are valued at fair value, with underlying T. Rowe Price funds valued at their closing net asset value. This means the fund's value is directly derived from the market prices of its holdings. The fund uses derivative instruments, specifically futures contracts, to manage risk and for efficient portfolio management. They were short on MSCI EAFE Index, Russell 2000 E-mini Index, and S&P 500 E-mini Index contracts. This indicates they were taking a bearish stance on these particular market segments, likely as a hedge or to gain from expected downturns. The realized loss on these futures was over $26 million, while the change in unrealized gain was over $6 million. This note simply states that purchases and sales of the underlying price funds aggregated over $2 billion for the 6 months. This speaks to the active management of the fund's asset allocation within the T. Rowe Price family of funds. Generally, no provision for federal income taxes is needed because the fund intends to qualify as a regulated investment company and distribute all its taxable income and gains to shareholders. This is standard for mutual funds. This is where we see that the fund is managed by T. Rowe Price Associates, Inc. The fund pays an annual all-inclusive fee, which covers investment management and operating expenses. The effective fee rate varies by share class, with the I-Class having the lowest at 0.43% and the R-Class having the highest at 1.10%, excluding Rule 12B-1 fees. This section highlights the unpredictable nature of global events like environmental disasters, geopolitical conflicts, or public health crises. These can significantly impact the economy and financial markets, and by extension, the fund's performance. It is a good reminder that even in a well-managed fund, external factors can cause volatility. And finally, we have the signatures. David I. Stricher, the Principal Executive Officer, and Alan S. Dupsky, the Principal Financial Officer, have signed off on this report, certifying its accuracy. So what is our take on the T. Rowe Price Retirement 2045 Fund? On one hand, the fund has achieved significant capital appreciation in the reporting period, resulting in strong total returns across all share classes, especially the I class due to its lower fees. The diversification across multiple T. Rowe Price funds is a strength, offering investors a broad market exposure managed by a reputable firm. The fund's strategy of becoming more conservative over time as it approaches the target retirement year is also a positive for its intended audience. However, there are a couple of points to consider. The net investment loss in the income statement suggests that the income generated from the underlying assets wasn't enough to cover the fund's expenses during this period. This is not uncommon for growth-oriented funds, as their primary goal is capital appreciation, but it is worth noting the reliance on other T. Rowe Price funds also means that the fund's performance is largely dependent on their individual success. Finally, the varied expense ratios across share classes mean that investors should carefully consider which class best suits their investment size and needs to maximize their net returns. Overall, for investors targeting retirement in the distant future, this fund appears to be a solid option, offering strong growth potential with a structured approach to risk management over time. What is your take on these numbers and what they signal for the T. Rowe Price Retirement 2045 Fund's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out our Discord in the description for more discussions and insights. Thanks for watching. See you next time.